Hello, I'm Alex Davies, founder of Wealth Club, and today I'm with Dominic Keane of BritBots to talk about their Scale Up EIS fund. First off, Dominic, give me some background about BritBots and yourself.
Yeah, so BritBots has been investing for about the last 4 years and has invested in around 20 companies. Prior to starting BritBots, I started my career in early stage investment in venture capital. And then after a number of years, went on to start my own software company, which I built up for around about 10 years and floated on the stock market in 2013. I exited that business in 2015 and since then have been focusing on making investments in robotics, AI and automation.
And what do your funds aim to do for investors?
So we have two flavors of our fund. We have a seed fund, which invests at the very early stages of companies and helps them to get their technologies to market. And also a scale-up fund, which then takes the companies on once they have got a proven product and they're in the market to a certain degree. And we're ultimately looking to build superior wealth for our investors by working with this very particular fast-growing selection of businesses.
And typically, how many companies would an investor get exposure to?
So in our portfolios, they typically have between 7 and 10 companies to get a nice breadth of companies across the whole space of robotics and AI. We're entirely sector agnostic, and we like to balance our portfolios so consumers are getting a range of different sector exposure.
So talk to me about the characteristics of the companies you are looking for.
Yeah, so essentially our investment thesis is really saying that we believe over the next decade, the primary source of wealth creation in the global economy will come from fundamental productivity improvements. So that's the yardstick that we measure our companies. Where are they delivering, really strong productivity enhancements to the particular sectors or industries that they're moving into? So that's the thing that really excites us when we come across a business where we see it potentially being able to transform the core productivity of an industry.
And what sort of stage are these companies?
So we like to get involved with companies at a very early stage. So we run a seed fund which invests in the companies pretty much at their first stage of capital. And then our scale-up fund looks to come into the companies after they've been operating for a couple of years and have a demonstrable technology and the first few customers, and then can really apply capital to helping them go through that kind of commercialization journey in the early stages.
And how important is the management team when you're finding these companies?
It's obviously very important. The characteristics of the companies at the early stage is often quite sort of engineer, tech heavy, but it's a big turn off for us if we come across founders which are incapable on the business side of things. So we look for people who, whilst obviously having very, very strong technical credentials, also have enough sort of business savvy to at least run the business in the early stages. And then obviously it's beholden on the companies and ourselves to help build and augment that management team over time, so that by the time we've been working with them for a number of years, they should have a sort of fully rounded management group.
And how did you come across these deals?
So we've developed over the last few years a pretty unique deal flow pipeline. We're partnered with all the major robotics labs and universities in this country, and actually we've been expanding our European network a lot too. So we're attracting, really the best robotics entrepreneurs from around Europe now to come and work with us.
And you've talked about the sort of things you look for. What are the red flags? What are the things you avoid?
Well, I kind of said it before, where we find that, an entrepreneur is just too deep in the technology and can't really see the bigger perspective of the market they're operating in. That's a red flag for us. We also don't really like very deep tech businesses, the sorts of businesses where you're going to have to be investing for years and years and years before you have any marketable product. We like things which are, when we first come across them, quite close to market, and then certainly by the time they've reached our scale-up fund, they're actually in their go-to-market journey and they're, winning customers and they're earning their spurs in the real market rather than just the sort of proxy war of technology hype.
And can you talk to me about some recent investments you've made?
Yes, so from our Scale Up Fund, I guess two of the most exciting investments this year have been one, a business in Bristol called QLM Technology, which is a kind of poster child of the UK quantum technology industry, but they have a very applicable technology for measuring methane and greenhouse gas leaks from industry and oil and gas installations. So it's very much of the moment technology because they have a really revolutionary product for fighting global climate change. And that's been a very, very exciting company to watch really come through very fast this year. Another interesting one, kind of going back to the productivity theme I mentioned before, is a Birmingham-based business called Housebots, which have a wall climbing robot that can be used to substantially automate painting and decorating type activities. You know, it's a very, very heavily manual process at the moment, and technologies like this one can come in and really turn the fundamental economics of an industry like that on its head.
How about some of the older companies you've invested in? How are they doing? Any particular examples?
Yes, I'd say our best performer to date is a business called Humanizing Autonomy, which is in the self-driving car area. Obviously, it's a very competitive global market with automotive groups fighting sort of hand over fist to get a stake in these companies. So we've seen the price per share increase by about 15 times on that business since we first invested. Another really interesting one is a chatbot company called Future, where effectively they're providing automation for typical kind of customer service activities. And during the pandemic, they've been picked up by a lot of councils and the NHS to help provide better sort of citizen communications. And again, we've seen a really strong wealth growth on that business.
You mentioned the pandemic. How has the pandemic been for the companies you invest in?
Well, obviously, you know, it's been a tragic time for a lot of the economy, but particularly in the case of automation businesses, it also does represent a very real opportunity. Typically, in past economic cycles, we've seen that automation is particularly picked up on the sort of uptick coming out of recessions. So the typical model will be that enterprises shed a lot of staff, but realize they actually have to maintain the same level of outputs in many cases. So they invest quite heavily in automation at that stage. And we're starting to see signals of that coming through from this pandemic as well, that businesses are in a way more attuned to trying to be more efficient in terms of producing their outputs than they perhaps would have been before, particularly with the pressure on working practices and the need to trim down their cost bases.
And how much do you get involved with all these companies?
Yeah, our model is a pretty hands-on model. We're very actively involved. We take seats on all of the board. And given that we have pretty much unique insight into the robotics and AI world at a sort of macro level, we're able to sort of deliver those specific insights back to the company. And then obviously a lot of the need of the sorts of businesses that we work with is just to improve their processes and improve their operational capabilities. So we work very hard with the companies to put the sort of meat and drink of business operations in place so they can deliver effectively.
What about exits? Have you had any exits yet?
No, we are, as I say, just coming into our sort of fourth year of fund life, and we're expecting to start to see the early exits come through in the sort of fifth or sixth year of that. So there are a number of businesses which are showing, exciting trajectory towards an exit point, whether that be a wholesale exit or a kind of secondary turnover of the shares. And we expect to be able to report on that over the course of the next 24 months.
And is that what you'd say typically investors should start getting their money out after about 5 or 6 years?
Yes, absolutely. And from the 3-year mark, we are looking for ways that we can at least give our investors the opportunity for exit. But in practice, an exit from a sort of secondary transaction is likely to be sort of smaller than a wholesale company sale, which probably won't happen until sort of 5 or 6 years into the company's life.
And how risky is it, what you do?
Well, in one sense, it's a very risky investment activity, working with early stage technology startups. But, we mitigate that risk through a number of kind of key areas. First of all, by the nature of the place that we operate, automation technology is, very, very strong at the moment. A lot of the main M&A activities over the last 2 years have been driven from these sorts of companies. So we get a sort of hedge from the perspective of a strong exit market that we're working towards. And additionally, by taking a portfolio approach, we balance the specific risks of any given investment by a portfolio approach. And actually, in my opinion, if you're looking to put your money anywhere in the economy at the moment, to invest in these sorts of technologies is perhaps the safest place you can put it.
Have you had failures?
We haven't had any failures in our portfolios yet. We probably have one or two companies which are, moving towards a bit of a sort of zombie state where they're not really maintaining the sort of momentum we would like. But that's very much the exception rather than the rule.
So for people who want to put money into an EIS or SEIS this year, why should they invest with you?
Well, fundamentally, we are the only fund that really links these fundamental productivity improvements to our portfolio characteristics. So if you want to take a single bet on the sort of transformative future of the UK economy, BritBox is the place to put your money.
Dominic Keane of BritBox, thank you very much.
Thank you.